if an organization is to be sold, then at what price they are going to sell. Brief verification and examination of books of account is known as auditing. By auditing by an external auditor, he'll come to know what mistakes he is doing while preparing accounts. Whatever the fund which is received from the outsider, whether it is used in a proper way or not. Whatever the financial statement what the organization is going to present, it is true and fair. Hello everyone, I am Harshita, lecturer, Department of Commerce, Vidhyaashram First Grade College, the Temple of Excellence, Mysuru. Today, we are in the third session of Unit 1, that is Introduction to Auditing. So, my dear students, your subject name is Principles and Practice of Auditing. Under that, your first unit is all about Introduction to Auditing. Now, quickly we shall recall what we have discussed in a previous session. So, in a previous session, we have studied about objectives of auditing. So, what is the main objective of auditing? So, the objective of auditing has been divided into three types. So, which are the three types? So, the first one is primary objective. And the second one is ancillary objective. And the third one is specific objective. So, these are the three types or the objectives of auditing has been divided into three types: primary objective, ancillary objective and specific objective. In today's session, we shall continue with a new topic, that is advantages and limitations of auditing. So, what are the advantages? So, why auditing is required in an organization? So, before that, so what is auditing? Auditing means brief examination of books of account or examination or verification of books of account is known as auditing. So, in an organization, accountant will prepare books of account. So, he will record all the transactions in a chronological order. Then he will prepare financial accounts. Then he will present the financial statement. So, in order to check the accuracy of this financial accounts as well as financial statement, we have to verify each and every entry in the organization. That is, each and every entry in the books of accounts, which is known as auditing. So, what is the meaning of auditing? Auditing means brief verification and examination of books of account is known as auditing. So, the person who audits or who verifies is known as what? Auditor. Now, in today's session, we shall see what are the advantages of auditing. So, audit offers several advantages. So, they are advantages of auditing to the business, enterprise and management. So, here advantages have been grouped into three types. So, the first one is advantages of audit to the business, enterprise and management. So, how auditing is helpful for business management as well as enterprise, that is business enterprise. So, the first one is audit ensures accuracy or correctness. So, here I have told you in the beginning, the main objective of auditing is to check whether the transaction is correct or not, or the financial results or the financial statement what they are going to prepare, whether that financial statement or the results obtained from that financial statement is correct or not. In order to check that, we have to do auditing. So, auditing ensures accuracy. Accuracy means what? Correctness or accuracy of books of account. And the second one is audit ensures authenticity and reliability. So, authenticity and reliability of books of account. So, whatever the transactions which have recorded by the accountant, whether it is genuine entries, whether it has actually occurred in the business or not, and reliable, whether there is any some truth in that. So, for that we have to go for auditing. So, in the sense, the main objective is that, so whatever the transaction which is maintained by the accountant, so that is correct or not. So, for that we have to make auditing process. And the next one is audit helps in the detection and rectification of errors and frauds. Now, what do you mean by detection? Finding out of errors. So, when the auditor goes on looking into or checking each and every transaction, he'll come to know whether they have made any mistake, whether the accountant have made any mistakes. So, he will find. So, detection means what? Finding out of mistakes and rectifying. So, how to rectify, how to correct that mistakes. So, here errors and frauds, rectify and correct errors and frauds. So, in our previous session, I have already told you. So, what do you mean by errors? Errors means unintentional mistakes which are made in the organization or which are made while recording the entries in the books of account is known as what? Errors. So, I have given several examples for errors. So, there are number of errors like error of commission, error of omission, compensating errors. So, these are what? Errors. In the sense, unintentional mistakes which is made by the accountant while recording in the books of accounts. And the next one is fraud. So, fraud means what? It is an intentional mistake. So, it is an intentional mistake which is made in the books of account in order to cheat the organization. So, if you go for auditing, so these errors as well as frauds can be identified. And the fourth point is audit helps the enterprise and management to ascertain whether they are following legal requirements. So, while recording each and every transaction in the books of account, they has to go as per law. So, there are certain legal policies as well as principles to be followed while recording in the books of account. While this auditing process, so the auditor will come to know whether the organization is maintaining books of account as per law or not. So, if they are going against law, then what happens? This accounting results will be false because they have to go as per the law. And the fifth one is audit point out the weakness of the existing system of internal check and internal control. So, what do you mean by internal check and internal control? So, before appointing a person who is outside the organization for this auditing process, what the proprietor will do? So, in order to reduce the risk, he will appoint a person inside the organization. So, he may be a manager, he may be an employee of an organization. So, what is the duty of this manager as well as employee? To go through all the accounts which is maintained in the organization in order to reduce the risk, in order to reduce the mistakes in the books of account. So, an internal auditor has been appointed. So, when this auditing process happens, so the responsibility will be given to the manager or employee, right? So, how they are going to audit the books of accounts? So, here by auditing process, the proprietor will come to know what is the weakness, whether our internal auditor is capable or not. So, their weakness can be checked. At the same way, what is the system of this internal control? So, whether they are managing it properly or not. So, this can be ascertained by this auditing process. And the next one is audit examination makes the employees in charge of accounts and records elegant, regular and up to date. So, as I told, before going for an external auditor, so an internal auditor is been appointed by the organization. So, he may be an employee or he may be a manager of the organization. Now, when a responsibility is given to a particular employee. So, what the employee will do? He will have that fear that if any mistakes happen, that employee will be caught, right? So, all the responsibility of mistakes will be in the hands of that employee. So, what the employee will do? He will regularly update the books of account. He will regularly check the mistakes what is going on in the books of account. So, he will be up to date. So, this audit examination helps the employees of the organization who is being assigned some audit work. So, he will be regular in his work because he will have that fear that he will be caught if any mistakes is made. And the next one is loans and credit facility. So, by this audit examination, we'll come to know what is the exact picture of the organization. So, whatever the books of account they have maintained. So what is the exact picture of that? So it helps the financial institutions to provide credit facilities like loan and other credit facility, because depending upon the financial position of the organization, many financial institutions are providing financial assistance, right? So if the organization provides fair and true financial position, then it will help the organization or the financial institution to provide loan and other credit facility, because they will have that confidence that the company has gone through the auditing process and whatever the information which are there in the financial statement is true and fair. And the next one is liability of an enterprise as to income tax, wealth tax and value added tax. Even it helps for the income tax authority to give this or to liable for income tax, wealth tax and value added tax. So depending upon the financial statement, audited financial statement, even the tax authority can levy tax in the organization. And the ninth point is that a business can enjoy better reputation. So if an organization is going for auditing, then it will have a good image in the minds of investors as well as public. Because whatever the financial statement, what the organization is going to present, it is true and fair because the organization have done auditing. In the sense, they have verified their books of accounts. So it will have a reputation in the minds of people as well as investors. So a business can enjoy better reputation if its accounts are audited by an independent or professional auditor. It's not that auditing which is done internally. So if an organization appoint an external auditor who is independent person, who is not linked with the organization, doesn't know what is the affairs of the organization, so such a person is appointed in order to verify the books of account, then this public as well as the investor will have a very good image in their minds. So it increases the reputation of the organization. And the next one is audited accounts are more reliable as evidence in the court of law. So whenever the problem or any problems arises in the business, then this audit report. So what do you mean by audit report? So what is audit report? So after examining the books of account by the auditor, he will prepare a report telling that what is the current situation of their books of account, whether the transaction which is recorded in the books of account is accurate or not. So that record or that report is known as what? Audit report. So audit report is the result of the financial statement of the organization. So it is a result which is mentioned in the audit report. Now, whenever if any problem arises in the organization, so this audit report acts as an evidence. So the proprietor will also have a confidence that we have done the auditing process and whatever the statement, what they are showing in the financial statement or whatever the result which is showing in the financial statement is accurate because they have done the auditing. So this is the 10th advantage, that is auditing. Audited accounts are more reliable as evidenced in the court of law. So it acts as a evidence. And the next one is facilitate calculation of purchase consideration. Now what do you mean by purchase consideration? If an organization is to be sold, then at what price they are going to sell? So that price is known as what? Purchase consideration. For example, A company, A Limited, is to be sold to B Limited. Now A Limited is to be sold to B Limited. Then at what price A Limited is sold to B Limited? So that amount is known as purchase consideration. So through auditing, it facilitates the calculation of purchase consideration, because if they see their financial records, then if the auditing process is done, then whatever the records they have maintained is accurate. So it will be easy for the calculation of purchase consideration. And the next point is 12th one, The insurance claim can be easily identified by the insurance company, because whatever the statement what they have given or the financial statement what the organization is having, it is accurate. So whatever the risk which happens in the business, it can be easily claimed by the insurance company. So the insurance company can provide or can take the risk and provide the amount to the organization. And the next point is, audited accounts serve as a basis for solving the disputes as to higher wages. Now, if a proprietor is facing of the problem of higher wages of the workers, then this audit report acts as a evidence. So it acts as a evidence to tell that what is the current situation of our organization. So the disputes of the workers can also be solved, because that report can be given to the, or that report can be shown to the workers, so that they will come to know what is the current position. So here they can't cheat the workers, because the audit report tells that the financial statement what the organization is showing is accurate. So they will come to know what is the actual current position of the organization. So the disputes of wages can also be solved. Next, comparison of accounts from year to year. So if they are doing auditing, then the accounts which are maintained from the previous year, current year, and they are doing auditing in each and every year, then it will be easy to compare the accounting results from one year to another year, because they are going to maintain same method of accounting process, and even the auditing is done. So the financial results will be accurate. So they will be easy to compare from year to year, that is from previous year to current year to next year. So they will come to know whether there is any improvement or not in the organization. Now we shall see the second, that is advantages of audit to the owners of the business. So how this auditing is helpful for the owners of the business. So if you take of a sole trading concern, so how it helps? So this auditing helps the sole trader to know the current position of the sole trading concern. So sole trading concern means what? A single person starting a business is known as sole trading concern. Now he is the only one owner of the business. So when he audit his account, he will come to know what is the current position of his business, as well as or whether he is maintaining account as per principle as well as procedure. So any error or fraud can be identified by the sole trader, because he is the only one person who is managing the business, who is investing the capital, who is sharing the profit and loss. So he'll come to know what is the actual position of his business. So how it helps the sole trader? In case of sole trader, assures him that all business transactions have to be duly accounted, because he is the one who is maintaining the accounts, right? So by auditing by an external auditor, he'll come to know what mistakes he is doing while preparing accounts. Then how it has to be rectified. And if he is doing correctly, so he will have that satisfaction that whatever the accounts shown by him is accurate. So this is done by auditing. And the next one is in case of partnership firm. In case of partnership firm also, in most of the cases, there will be disputes between the partner while sharing profit and loss. Even though there will be partnership deed, but whatever the accounts maintained by the partner, so they don't know whether it is accurate or not. So by this auditing process, they will come to know whatever the partnership accounts maintained in the organization is accurate and no partner is being cheated. So here they will come to know that no partner is being cheated, because whatever which is there in the deed, so it is following according to that, or the organization or the firm is following according to that. So in case of partnership firm, audited accounts. So audited accounts help to reduce the disputes between the partner. At the same time, it will help the organization to value its goodwill and any other settlement in accounts during admission, retirement or death of a partner. So you know, during admission, retirement and death of a partner, this partner's account has to be settled. So if the organization is doing auditing, then they will come to know what is the exact financial position of the organization, and no partner will have disputes, because they will know that an external auditor have come into the business and he has audited or verified the accounts. And the third point is in case of joint stock company. So how this auditing help in case of joint stock company? So there are number of users who are dependent on accounting information. So there are number of users who would be waiting for the accounting information. They may be internal users or external users. So whatever the accounting information or whatever the accounting results which is there in the financial statement, whether it is true or false. So they have to know that, right? So if these users comes to know that the organization have done the auditing process, then they will have that confidence that whatever the financial statement revealed by the organization is true and reliable. So it is not of false in nature. Then of course the investment of the organization or the business also increases. So in case of joint stock company, audit of accounts assures shareholders. So it creates a good view in the minds of shareholders because shareholders have invested money in the company, right? So they will think that whatever the financial statement which is showing, it is true and fair, and that the affairs of the company are smoothly and the investment is safe because the shareholders have invested money in the joint stock company and they feel or secure that their investment is safe. The shareholders of a company can value the share on the basis of audited accounts because in audited accounts, the financial statement result will be accurate. And the next one, in case of cooperative society. So how it helps in case of cooperative societies? So in cooperative society, if the auditing process is done, then whatever the fund which is received from the outsider, whether it is used in a proper way or not, and what are the services which is being provided by cooperative society, whether it is reaching to the customers or not. So that will come to know by auditing the accounts. So in case of cooperative society or trust, audit assures the members or the beneficiary that the affairs of the society is running smoothly. So there is no other complication, and the fund which is received by cooperative society is not being wasted, it is used properly. So this is in case of cooperative society. Next, advantages of auditing to others. Let us see who are that others. Lenders can depend on audited financial statement. So lenders means what? They are the financial institutions who have provided loans to the organization. So lenders can depend on audited financial statement while taking a decision to grant credit to the business concerned. So before any organization grant credit in the form of loan, so they will check the financial position of the business. So if they see that the organization financial statement has been audited, then it creates a good image in the minds of this lenders also, and they will provide more credit facility to the business. And the next one is tax authorities. Tax authority can also depend on audited account in levying tax like sales tax, income tax and wealth tax of the business. So because the true and fairness of the accounting statement leads this income tax department to levy tax like sales tax, income tax and wealth tax. Next, audit of accounts safeguards the interest of the workers. So as I told, it creates a good image in the minds of workers and they will know what is the current position of the business and is helpful in the settlement of claim for higher wages and bonus. So if the accounts is showing, or if the accounts what they are showing is accurate, and if they earn more profit, of course they can claim for higher wages as well as bonus. And the next one, insurance company. So as I told, if they have audit report, even the insurance company can also give insurance to the organization. So even the business can claim if any risk has happened in the business, so they can claim from the insurance company. So insurance company can rely on audited accounts to settle claims. So if any theft or if any fire happens in the business, then the business can claim in the insurance company. Then the purchaser of the business. So as I told, So one who want to purchase a company, so if they are going on an auditing process, then they will come to know what is the exact value of the business. So it helps to decide the purchase consideration. So the purchaser of the business can easily calculate the amount of purchase consideration on the basis of audited accounts. So if the accounts are audited, he can easily ascertain the purchase consideration. Next, audited accounts create confidence in the minds of who? Investors, like shareholders, and in case of joint stock company, because shareholders will purchase the share of the joint stock company, so it creates a good image, or it creates confidence in the minds of investors, that is shareholders in a joint stock company. Now we shall see what are the disadvantages of auditing. So the first one is non-detection of errors or frauds. So as I told, auditing means verification and examination of books of account in order to check whether the financial statement is accurate or not. So the auditor has to go through each and every transaction, right? So sometimes due to lack of time, or due to some other reason, auditor may not go through each and every transaction. During such situation, what happens? He cannot find certain errors as well as fraud which is made by the client. So auditor may not be able to detect or find certain frauds which are committed by the clients. So he can't find all the errors. So there are certain transactions he might have missed out. So there may be an error. So such type of transaction which leads to non-detection of errors or frauds. Next, dependence on explanation by others. So when an external auditor is being appointed in an organization, so what he has to do? He has to listen the explanation of the officers who is been appointed in the company or who are there in the company. So because the company is different, auditor is different, right? So when an external auditor comes for auditing process, so he has to listen the explanation of the company officers. So this is also one of the limitations of auditing. So auditor has to depend on the explanation and information given by the responsible officers of the company. So audit report is affected adversely if the explanation and information is proved to be false. So suppose the company officers have given false statement, then the auditor have listened that statement, then it is proved to be false. Sometimes if the explanation which is given by the officers is false, so it leads to the disadvantages of auditing. And the next one is dependence on opinions of others. So here auditor may not be expert in all the field. So he has to listen some of the opinion from others, right? So during such situation, the opinion of each and every person will be totally different. So here the auditor will get confused. This is also one of the disadvantage. So auditor has to rely on the views or opinions given by different experts because he is not expert in all the field. So he has to take advice from certain experts. But the experts' view will be different from that of auditor. So during such situation, he has to go through his personal opinion, which may be false also. So experts like lawyers, solicitors, engineers, architects, etc. He cannot be expert in all the fields. So this I have told you, since he is not expert in all the field, he has to take advice from some of the experts. Next, conflict with others. So auditor may have different of opinion with the accountants, management, engineers, etc. In such a case, personal judgment is given or personal judgment is taken into importance. So here conflict with others. So as I told, he is dependent on not only one person. So it may be internally or externally, or internally inside the organization or outside the organization. So he has to depend on some other person, right? Whereas the opinion of all the person will not be same. So during such situation, he has to take his personal opinion. Plays an important role. It differs from person to person. So the personal opinion differs from person to person. This leads to conflicts as well as confusion in the minds of auditor. Effect of inflation. So financial statement may not disclose true picture. So when there is inflation or deflation or changes in the economy, so this financial statement does not prove or does not show the current financial position. So financial statement may not disclose true picture even after audit due to inflationary trends. So if there is any changes in the economy, so it affects this business also, but the financial statement doesn't show that changes. The next one is corrupt practices to influence the auditor. So when an external auditor is being audited, we can't tell that whatever the auditing which is done by the auditor is true. Sometimes it may go wrong because of this political influence of the company members. So here inside the company itself, some politics takes place between the company members as well as the auditors. So during such situation, this audit report may not be accurate. So the management may use corrupt practices, that is political influence, to influence the auditor and get a favorable report. So there may be a chances that this company may act as a company might have a political influence and tell the auditor to give a favorable report. So during such situation, what happens? The actual result will be hid and the favorable result will be shown to the users. Report about the state of affairs of the organization. So this is through corrupt practices. And the next one is no assurance. So auditor cannot give any assurance about the future profitability and prospects of the company. So we can compare from previous year to the current year, but we cannot predict what is the future profit by this auditing process. So he is just verifying the accounts, but he can't predict what will be the future profit of the organization. Next one is inherent limitations of the financial statement. So while recording in the financial statement, some transactions might not have recorded. So financial statement do not reflect current value of the assets and liabilities. Many times are based on personal judgment. Here, what the organization or what the proprietor will do, he will not record the exact value of asset and liability. By his own predict, he might have recorded. For example, depreciation on asset, he might not have calculated, but he can assume that this might be the current value of asset. So during such situation, the current value of asset and liability cannot be ascertained because of the personal judgment of the proprietor. So he may predict that this would be the current value of asset. So many times are based on personal judgment of the owner. Certain non-monetary, so non-monetary facts cannot be measured. Audited statement due to these limitations cannot exhibit true position. For example, depreciation. So the asset which is being purchased before 10 years, so now the owner might predict some value. So he may not calculate depreciation according to a particular method, but he simply will predict what is the current value of asset. So during such situation, what happens? We cannot exhibit the true value of asset. Next, detailed checking not possible. So detailed checking of all the transaction is not possible by an auditor, because if the auditing is done once in a year, then what happens? There are many transactions to be gone through, right? So during such situation, so it will be difficult for the auditor to go through each and every transaction. So during such situation, what he will do? Auditor cannot check each and every transaction. He may require to go for test checking. So what do you mean by test checking? Now think that there are group of transactions here. Now what the auditor will do when the number of transaction is very high, he will take a part of the transaction and he will check this transaction. He will take some part of that transaction and he will check that transaction. If the transactions are correctly recorded, then he will think that rest all the transactions will be correct. So this is what test checking. In the sense, taking some of the transaction and testing whether it is correct or not. So if it is correct, then he will assume that rest all the transactions would be correct. But there is a chances that here also there will be some transaction which might went wrong. This is also one of the disadvantage. When there is more number of transaction, the auditor may go for test checking. Next, auditing is a post-mortem examination of accounts. So what do you mean by post-mortem examination of accounts? So after preparing accounts or the financial statement, then auditing comes, right? So first is accounting. First is account, right? Next is audit. So what do you mean by accounting? So recording each and every transaction in the books of account, that is current transaction. So whenever the transaction have taken place in the business, immediately that transactions will be recorded in books of account, which is known as what? Accounting. Then what is auditing? So it is a post-mortem. In the sense, after recording each and every transaction in the books of account, then this auditing process takes place. In the sense, verifying that transaction. Here, verification doesn't happen immediately when the transaction takes place. So it happens after a long period of time. Maybe half yearly or maybe after 1 year. So in the sense what? It is post-mortem examination of accounts. So after preparing accounts, after few days, then this auditing process takes place. In the sense, immediately the transactions are not verified. So it is verified after a certain period of time. So what I'm going to discuss in my next session? In my next session, we shall discuss about classification or types of audit. So what are the types of audit? And this is a very important question from the examination point of view. So my dear students, in today's session, we have learned advantages and limitations of auditing. In my next session, I'm going to discuss about types of audit or types of auditing. See you all in my next session. Till then, take care. Thank you.